Welcome to episode 247 of The Numbers Game. I'm Jace. I'm here with Nick and Marty. And quick shout out, happy birthday to our producer, Tommy. Happy birthday. Hopefully there's some streamers, balloons, celebrations. I'm sure he'll throw in his production magic. But Marty, good to have you in, mate. How are you?
I'm going well, Jace. And to celebrate, Tommy's, our producer's birthday, I wanted to bring, I know I've trashed Melbourne in the past. I know I haven't been the greatest advocate, and I thought to myself, let's challenge ourselves and find something good. And I think I have. I think I've uncovered a little bit of gold that I wanted to present to you guys, and just change perspective out there at the moment. Nick, you're nodding. Are you?
Well, I don't know. We'll determine if you're challenging yourself or you're lying to yourself, I guess. Let's get through the next 20 minutes and see what you got.
That's a very good point. I don't think I've decided fully yet, but I'm going for it. No, I think Melbourne could potentially have a property gold rush here in 2025. And I think the fundamentals, I was looking at the fundamentals in 2001 and 2020 when we had COVID and cheap interest rates. But really, I feel like the fundamentals are arguably stronger in this potential cycle. We're just not going to get a dramatic jump all of a sudden. I feel like it's going to be a very good 3 or 4 years. And I'm particularly bullish about the townhouse and apartment market. And I'm not talking about high-rise apartments. I'm talking more boutique. I feel like if people are looking to get in the market around that 600 to 750 range, and where the affordability is at in regards to incomes, and with interest rates starting to trend slightly down, I think there could be a fair bit of growth in that market. And you're seeing it in the Gold Coast. There's limited supply in the Gold Coast, I know. But I feel like with the migration that's coming to Melbourne, I got this inkling we're going to really boom in this area. I think even with migration, I think there's about 330,000 people coming into Australia a year, and we're picking up quite a bit of that. Like it's probably about 102, 104,000, and they need somewhere to live. And those people are not all going to be able to afford standard housing. So I feel like that apartment market and townhouse market, including first home buyers coming in, trying to get into the market, is going to be potential to see some real action and growth around that region. Initial thoughts, Nick?
Yeah, well, I tend to agree on the first homeowner comment. We're seeing it now. Obviously, it's no secret we have a mortgage broking business, so there's a lot of young people that want to get in. I've always been bullish on the boutique apartment market for a couple of reasons. Obviously, they're generally a bit bigger than the new stuff that's built. They're not going to build them again like that because it doesn't make sense economically for developers to do that. Body corporates are lower. Like one of the things that really kills the high-rise apartments is the body corporate fees and people's ability to fund those. And it's the next thing, right? Like if you can't afford a house, then you want your own little piece of land, which would probably be a townhouse. And if you can't afford a townhouse, then you want an apartment that's got a bit of a courtyard. So yeah, I totally agree with. I can see why you're thinking that. And you mentioned the Gold Coast. Brisbane's been a massive one to watch. Only a few years ago, Brisbane apartment market had gone absolutely nowhere. And I think we've got some clients that have seen their Brisbane apartments double over the last few years. Clients that might have paid $500,000 for these properties that are now getting $1,000 a week in rent, sometimes more. And that's just purely supply and demand, right? It's just it's when does that happen here? When does the demand outstrip supply?
Yeah, fair point. I think the Melbourne market, it peaked sort of 2022. I think we had a sort of a medium overall house price at about $1,090,000. But we haven't hit those peaks again too. So I think our value proposition in Melbourne is also really good. I think we're sort of we're bottoming out in the market. And what I've seen over the last 4 months is sort of that trend go to the upside. Clearance rates are just recently starting to consistently hit 70%, sometimes slightly under, sometimes over, and over 70%, you start to see a bit of a hot market start to emerge. So that's certainly happening. And we've had price growth in Melbourne for the last 4 months. So that in itself, I feel like we've got this little breaking trend going forward that we're going to see some good times ahead. And out of all the Melbourne suburbs in the outer east and across Melbourne, really, 70% of suburbs are showing growth over the last 4 months. So there's definitely, that hasn't been seen over the last couple of years. In fact, we've been in decline in some suburbs. And we've also, an interesting stat that I picked up was the Sydney medium house price is 64% higher than Melbourne. And it's the highest difference historically ever. Historically, Sydney's always been around about 29% higher over the last decade. So that is an enormous point of difference that I haven't seen before, and that's showing up in the stats as well. So you've got migration levels into Sydney happening sort of a little bit higher than Melbourne, probably 130,000 a year, 120,000, 30,000 going into Sydney, 120,000 coming into Melbourne. It's a little bit low. I think it's about 104,000 into Melbourne. But I go, think about the affordability difference. If people are coming into Sydney and New South Wales, then it's pretty unaffordable, right? And there's not an oversupply of rentals there. So where do those people end up going to? Potentially Queensland, and there's a shortage of supply there. But Melbourne's actually got a half decent supply of property. So I feel like we're going to get, and we've got a great cultural diversity, but there's a lot of jobs too. So, and just emerging type jobs. So I think there's going to be more opportunity, and we're going to see people come into Melbourne. And Jace, you'd be interested in this as well. The vacancy rate on rentals was dropped to 1% in January this year in Melbourne, which is extraordinary. Like a decent vacancy rate usually sits around 3%. And it's loosening a little, but it just goes to show that even from a point of view of tenants being in the market and struggling to find property in the market, it's almost forcing them to have to buy and go into 1-bedroom, 2-bedroom apartments. And it's 30% of tenants' income is now going towards rent, which is the highest it's ever been as well. Which is, when you compare that to mortgages, 40% of people's mortgage income, it's about 40% of their income go to the mortgage, 30% going into rent. So it's like, it's some interesting numbers there, Chase.
Yeah, the numbers, Marty, this is why you always come with the gold for the Numbers Game podcast, and why, if there's ever been a viral video that's gone around, it's been your head on it. I guess one of my questions back to you the way, you're bullish about it. You've got some confidence. Is there anything that you can see that could go wrong for, these predictions? And you're not alone. I think there's a lot of, property advisors and spruikers out there, and, brokers, anyone who's looked at the Melbourne market and has an understanding of these numbers is feeling bullish about it. But Marty, I know you also think outside the box. So is there anything you can see that could go against Melbourne at the moment?
It's the conversations we've had in the past. Obviously, the property taxes, a bit of a killer, particularly for investors. But will the lack of vacancies in tenancies on investment properties increase the yield up as well? So I go, we had 11% rise in rentals last year, and we're already at 4% off the back of that this year on an increase, right? So I'm going, now eventually it's got to stabilize, but I'm going, are we sort of looking at the perfect storm? And even looking at the number of people coming in, like in Melbourne, we're going to have 9 million people by 2050. So it's not like it's going to slow up. And we still have a supply that's available, even though we're still probably about 100,000 dwellings short, but there's more availability in Melbourne, Victoria than there is in any other state, like literally any other state. So it's and some people will say, well, that's a bad thing, but because that will ensure prices don't go up. But I think a little bit differently on it. I think that will drive people to us, because where do they go otherwise? They're not going to pay these absorbent costs in Sydney to secure a property. Brisbane's really tough to get into now, and Queensland, so you're going to be spending a good dollar there. Whereas I think Melbourne, you're going to get this nice incremental increase if you can find your way into the market over the next 4 years, where you're going to get some reward for it. So I'm just quietly bullish on Melbourne, but I don't think we're going to get a massive spike. But I just feel like the next 3 or 4 years will come into our own based on just the numbers I'm seeing across renters wanting to get into homes and migrants coming in, and just it's the upgraders I worry about. It's probably the people that are not going to want to overcapitalise. So are we going to get that extensive growth in the 1 million to 2 million market? I'm not sure. That's what I'm not sure about.
I think that's the challenge, because we've spoken about this in the past, but at some stage there's just not enough money in the family budget to keep paying more. So you mentioned 40% of your mortgage going towards your 40% of your income going towards your mortgage. How much can that continue to grow? But does it push those people that need bigger houses out into those other areas that they can afford? So that pushes the prices up in those areas. Do people choose to stay in the area they like and maybe just deal with a smaller home? But to your original point, I think at that lower end, where that's obviously where people will come in, there's definitely going to be appetite there. And as I said, we're seeing it.
I'm interested in your thoughts too, Nick and Jason, in regards to that bracket, the upsizer bracket. Do people now, because of what the taxes have come out at on investment properties, and we know insurances are costing a bomb to hold property, there's a lot of costs in property, are people now going to pivot to go, you know what, I'm going to invest in the home. I'm going to put more money into the home I buy as my significant asset, and then start to diversify into shares and other assets, as because traditionally people buy their home, they might look at one investment property, the mums and dads, and and that sort of investment type continues and provides tenancies. But do you think people are going to be more all in on the home and try and extend a little bit more on that because there's no capital gains on it and they're not getting taxed as aggressively?
100%. And the one thing this state is doing is trying to bring people down to a level playing field. That's absolutely clear with what's happening. And, you can go down a rabbit hole on that stuff, but there's no longer, there is incentive, but the incentives are nowhere near what they were to get ahead. So if you look at the cost to hold an investment property now, and it's a cost, particularly in Victoria. If you buy an investment property, unless you're buying a one-bedroom apartment, if you're buying an investment property and you're funding most of it through a loan, you're negatively geared. That's just a fact. So people just don't want the headache anymore. So you're negatively geared. Then if it does go up, you've got significant capital gains. Now they've, I know that super rules at 3 mil. Some people might say that's out of reach, but the problem is they've tapped the super funds now. So where does that end? The only safe haven at the moment is owner-occupied property. And I know, there's plenty of property gurus out there talking about, renting and building these big portfolios. But for a majority of people, they're not trying to get rich off building big property portfolios. They just want to be happy. And unfortunately, in this state, one thing that doesn't make you happy at the moment is holding an investment property. It's so difficult. It's really difficult to do. So yeah, to your point, I think most people are going to pour money back into their owner-occupied home. I've spoken about this on the podcast before. It forms a big part of people's retirement. Maybe not the best financial decision, but people aren't after that. They're after certainty and just being happy. So mate, 100%. We're seeing it now. All of this first homeowner activity that's happening now, they're buying investment properties. They're buying investment properties that people are fed up with. They don't want to hold them anymore. So you're going to continue to see that for sure.
Yeah, I'd say as well, we're probably having the most conversations around debt recycling as part of this, getting rid of the investment property, taking whatever money was able to be made on that as a profit, putting it back into paying off the main residence, and then being able to use that to draw back against the main residence into putting that into a managed fund where the interest is then tax deductible against the growth in that managed fund, dividends that you earn from the fund, and then being able to turn that into a portfolio that you can grow year on year as a bit of a different strategy. So, and then you got diversification. You're not, double dipped into 2 properties and, losing a couple $100 a week on negative gearing. It's a bit of a different kind of mindset of the interest on that loan. It's invested into something different. So those conversations, we haven't had as many, like as I said, more recently than we've ever had before, because that psychology of the investment property is hard work. There's so many rules and regulations, so many things that have come out, the noise around the taxes that are coming for property in Victoria especially. So simplifying. And when it comes down to it, of all the investment properties that are owned by, the Aussies out there that had a crack, 72% only have one. The idea that all these property investors, they get all these properties and, they're making heaps of money. Most of them are, they're stretched. They're stretched to pay their repayments. They're dealing with the stress of the property. Sometimes there's tenants in there that are causing some dramas. It's not very often you get to the second property, third property, fourth property. It's just not the numbers don't show that is happening. And usually that comes down to strategy and, what's happening in personal circumstances as well. But, people's lives change and their priorities change.
Just on the headache, and this is the stuff we're seeing at the moment. It's just rife. The young guy in here, he had an issue with one of his, he's got a home and an investment property. He had an issue with the roof and there was leaking. So the agency, which is a good agency, they just went and got their quotes, sent some quotes off. The quote that he got back to fix the roof was $8,800. Now, that's call-out fees, that's everything. Now, this particular individual in our business happens to be pretty handy. So he went and had a look at it himself, had a good look at it himself, sent some quotes to some other people, or got some quotes from some other people, end up getting it down to $3,300. Now, this particular young guy had the time to go out there, the ability to get up on the roof and have a bit of a look, take some photos. But most people would have copped the $8,800 because trades are now starting to take advantage of this stuff. They're all, I don't know if they're busy or whatnot, but how do you get 3.3 to 8.8? That just doesn't make any sense. So if a mum and dad gets that quote at 8.8 and they think that's what they've got to pay, what's the first thing they're going to consider doing next? They're going to consider selling the property because they probably only get 25 grand a year for the property. Then they've had to fork out 8.8 to fix one issue. So these are the things that are happening at the moment, mate. It might sound like I'm ranting a little bit, but it's just the fact of what's going on at the moment. I don't think it's going to impact what you're saying because at the end of the day, it's the owner-occupiers that are picking these places up.
I think that's the space. I think that's the space where you can create, you have to think about creating wealth for yourself. But like you say, that story there, just that cost to someone could, decimate their year, basically. So it's And
to Jace's point, you're never going to get a bill from the managed fund or the manager that says we need 8.8 because the office has got a leak in the roof, So it's people are just over the complexities. Money aside, they're just sick of it. And so I think that's the one thing that could even hold the growth back a little bit because the supply is now coming. The supply is there for these young people to get in. But fundamentally, I agree with everything you're saying. Like you just look at the cycle. The next phase for Melbourne's up. There's absolutely no doubt about that. So
yeah. I'm just encouraging younger people to get into property. Like there's 2 bedders around, Richmond that you can pick up for $650. And, if these people get into those types of, properties with facilities around them, it's, they're going to do okay. So, don't give up hope out there. It's there's opportunities. But I think you're right, Nick, too. It's just trying to work out how people can then diversify into other assets. You've got the 3 million cap into super, but again, you've almost got to play the system for what it gives you, don't you? You've got to come in and go, all right, well, let's maximize to that point. It might be 20 years, 25 years, and then you're thinking maybe it's a business, where you're creating money through a business vehicle. You've got to be nimble and ask deeper questions, and maybe that's enough. You own a rock and getting 3 million super, you'd be very happy. But again, you've got to utilize what's available in the right way, just so you don't burn money for no reason.
No, I really like it. I think as well, there's a lot of people out there, and look, we speak to, young couples that are trying to get married or married and starting a young family. And a lot of the time, I think the thought process or expectation is, if we save a little bit more for a little bit longer, or we save for another year or two, we'll be able to buy, the $1 million property. And then we can afford that then when we've, back at work, or, we're a few more years into our career, as opposed to getting in now in the $600,000, $700,000 property rather than paying rent somewhere else, or, depending on your circumstances. So I think, with that in mind, Marty, of what the property prices can do for the next couple of years, it probably is time to change the mindset from sit out of the property market for 3 or 4 years and wait to buy down here, because all you're doing is letting the property prices get further and further away. So
yeah, and the danger is the yield too. Like, if we look at that 11, I know yields weren't doing much on investment properties for years, probably 10 years, it was pretty stagnant there. But I'm going, it's back up to 3.7%, and that's up from 3.3% last year. And the average rental in Victoria at the moment is $640 rent per week at the moment. So again, if that starts to escalate, I don't think it's going to escalate to the point where the investors go, oh, that's a great idea, given like what Nick just said, with some of the costs that come up and the insurance is virtually doubling, every year on year. It's crazy stuff. But you're vulnerable if you're a first home buyer and you're looking to rent and you're staying out of the market for the next 4 years. What concerns me is if you don't make a move with where you're at, I feel like you might miss this boat. And the other boats around Australia have already run. And I feel like I'm very certain that the next 6 months, you want to find your way in somewhere and then be able to ride the wave and get that nice sustainable growth and get in. Yeah.
Marty, what I can promise you is it's already happening.
Yeah,
it's absolutely already happening. So speaking to real estate agents, things are going over reserve. The first homeowners are paying more than what they expect to pay. So, obviously there's a bit of runway, but it's already happening. The market is definitely on the way up. And, I think when you mentioned the stats around it's going up sort of month on month, but we're seeing some significant jumps in particular properties because people are listening to people like yourself, and the expectation now amongst people is the market in Melbourne is gonna jump. Rates go down again, possibly soon. It's just a matter of time. So people are more educated now, and that FOMO is already here, and prices are moving, and they're moving quickly from what we're seeing.
I think it's one of those things as well. There's only so many times you can hear this message around Melbourne's property prices before you start to take action. So, Nick or Marty, if somebody's listening to this and then thinks, well, what do I do next? Where do I start? Like, I can afford $650 to $750. I've been sitting out of the game and I'm ready to get back in. What are the first steps? Where do I start?
Yeah, I'd be getting some strategic finance advice and around. And why I say strategic, talk to a mortgage broker 100%, because there's so much variance depending on which finance person you're sitting in front of. Some people have been told they can only do 550, yet they've got the capability to do, 690. You really want to get a good broker, working for you to ensure that your maximum capacity. And the amounts vary. I've seen many a time, Nick, you've seen this too, where we've had brokers come in that have gone to people and thought they could get 600, yet they can get 700, based on their actual circumstances. So, make sure you get strong advice and make your move where you're at, and feel good about it. Feel good about getting in.
Yeah, I like that. And then usually brokers, probably pretty good opportunity they've probably got buyer's agents that they know if if the person can't find a property themselves, or that's usually another barrier that we see is that, clients have been talking about buying a property, but then the decision paralysis of should it be there, and what type of property. So if you're also someone who's struggling, then talking to your broker and then buyer's agent, somebody after that.
Seeing a lot of that. I think I read a stat the other day that buyers agents are only 7% of the market in Australia. That's going to change and it's going to grow significantly. We're definitely seeing that in both investor and owner-occupier space. So, you just got to get the right people around you, because you don't want to be sitting on the sidelines 9 months after you've made a decision to get in. And I think we've seen that in the past in markets that move pretty quickly. So, speak to people that are experienced, whether it's good mortgage brokers or buyers agents who've been in a market like this before and can, give you some reality on what's happening in the market and what you need to spend to execute, because you just need to execute as soon as you can.
Yeah, and why I like that advice is because we're seeing a lot more often that buyers agents are getting access to properties off market prior to them coming on. So if you want to be, best in show and first in show to have a strong contract and put up to the vendor, then I think the buyer's agent is a really good way to get that first right of opportunity. So think about it in those terms.
Well, Marty, it's nice to have had a positive conversation about Melbourne and not mention, COVID down under his taxes. It's some exciting time. Footy, cricket. What a state, and we're approaching up 250. So there's going to be bats raised. It's going to be all happening here. But
Go Vic.
Go Victoria. Victoria is bouncing back. Thank you for joining us. If you've enjoyed this episode, don't forget to subscribe, like, depending on where you are, share the numbers game with a friend, follow Nick, Marty, and myself on LinkedIn, or, you can find us on all different things. I think Marty might even be on TikTok now, which is how he's going viral everywhere. So you never know where you're going to see our faces pop up. We do appreciate you joining us, and every like, rate, and subscribe really helps the Numbers Game podcast get out and about. But until next time, if you're not looking at Melbourne property prices, you should be listening to the Numbers Game. Until next time.
Victoria, on the move, I think.
Game over.
This podcast is for educational and informational purposes only. The conversations are of a general nature and do not qualify as financial or tax advice. We recommend before you make any financial decisions, you consult a licensed professional. Individuals on the podcast may hold positions in the companies discussed.